banking sector in Central Europe is not very large because in terms of assets, it is comparable to quite small countries like Austria or Denmark. But on the other hand, it holds almost 900 billion euro of assets. Despite that the sector is small, it is quite profitable. Comparing to Western European countries, the return on equity is much, much higher. For example, in the countries like Czech Republic or Slovakia, ROE is close to 15%. In Poland, above 12%. But on the other hand, we have countries like Hungary, where due to still high cost of risk and the pressure of the government in terms of new taxes and other obligations, we have the profitability of the banking sector below zero. Another interesting part of the banking in Central Europe is that there's quite high concentration of banks. Average share of assets held by top 10 banks in Central Europe is 76%. On the other hand, we have countries where it is much lower. For example, in Poland, top 10 banks hold only 60% of assets of the banking sector. And in that kind of countries, we might expect further consolidation, which will lead to better usage of the scale effect. So what we might expect in Central European banking sector in the next years? Definitely we'll have lower profitability due to the problems with the economy, higher cost of risk, and expected new regulations which might impact the way banking are doing business. And on the other hand, they might introduce new taxes which will definitely impact the cost side of banks in many countries. But on the other hand, banking sector is the industry where there are many new technologies now being introduced, which will change dramatically the way customers are being served by banks. And in the end, we might expect that we will definitely in the next few years have the new customer experience offered to the customers of the Central European banks.